what's good, self-direct investors, and welcome back to another episode of ETFs Explained. If you're new to the channel, my name is Jordan, and I'm the mind behind MakeMoreCapital, the financial education brand that hopes to make everyone a little bit more financially literate. And so today we are going to cover the cannabis ETFs that are available. Now, I do caution you from jumping into this situation right now, but I will just give you some context as to what I think could possibly happen in the future, just as someone that's been paying attention to this industry. That being said, if you haven't subscribed to the channel, please do so, and if at any point you find this video helpful or you enjoy it, please hit the thumbs up button. I really do appreciate that. So I'll walk us through the first ETFs, or the ETFs we're going to look for is the Msos, YOLO, HMUS, and HMMJ. Now there are many, but here, let me give you the context I was going to start off with. Oh, before we get into that, if you have yet to open up your self-directed tax-free savings account, there is a link to Questrade down in the description. They are Canada's #1 discount broker. I've been using them for a few years and I love them. They are a fantastic platform, so feel free to sign up through that link. You'll get some free money and you can reach out to me and I will help you navigate the platform, get you set up, and just help you understand what you're looking at so that you can make better financial decisions on your own. So this is HMMJ, okay? So I know I've talked about this and how different ETFs perform on different ETFs are found on different exchanges. So HMMJ is the ETF to invest in the Canadian cannabis companies on the Toronto Stock Exchange. Okay, so this one does pay a nice dividend yield of 13.52%. But again, that dividend percentage is very high because the share price has fallen such a significant number down to $5.95. Of course, the dividend yield and the share price are correlated because the dividend yield is a percentage of that price, right? So the dividend you're getting is 13.52% of 5.95. But anyways, what I wanted to show you the chart for was the hype that there was in 2017 and 2018, mostly 2018, about this industry. I had a few small victories. I also made quite a few mistakes. But paying attention to this industry and watching it has been a very big learning experience to me. And basically, like, this happened, this hype and run-up in prices happened because obviously all the underlying companies inside of the ETF are in higher demand. People want to own them, right? So that is what drove these prices up. Now, the thing is, this was Canada's legalization. And I'm not sure if you're familiar with details of the election or certain instances on cannabis legislation in the US, but I am hopeful that there will be another green rush, or there will be another rush for the United States. Like, once the US decides to legalize, there will be another massive run-up. So that is why I want to present these ETFs to you right now. Again, it's a high-risk play. I mean, not necessarily high. I mean, obviously there's risk. But long-term, if you can invest maybe $1,000 or whatever you're comfortable with and put it away, don't look at it for many years and come back to it, I see significant growth potential here. Obviously, everyone's situation is different, but it's just this industry is not going anywhere. Companies in the U.S. are making $100 million in revenue every 3 months, every quarter, so it's like that's pretty impressive in Canada as well. But what's happening in Canada is a lot of these small companies are going to get bought up by the few dominant ones that have enough cash and have established efficient systems. They have the best brands. And that's what I believe personally will be Aphria. I think Aphria and Canopy, well, if Canopy survives, they'll be bought out by Constellation Brands, but Aphria and possibly a couple others will run the Canadian market because they have the best brands. They took their time. They have the most capacity. A lot of things, but because basically all I'm saying is that we saw this happen before for Canada's legalization, and Canada's only got 37.5 million people. So you just wait until the US legalization happens. So jumping over just to show you Msos, here, let me run you through them. So Msos is AdvisorShares pure US cannabis ETF. So this invests only in US cannabis companies and it invests on the New York Stock Exchange. So this is the first of its kind on the New York Stock Exchange. Then we have YOLO, which is the AdvisorShares pure cannabis ETF. This one invests in a mix of, this is also from AdvisorShares, but this invests in a mix of cannabis companies from the US and Canada. And I believe this one does actually trade on the New York Stock Exchange as well. But this one is, again, it's not completely US based. It is mixed with some Canadian and US companies. So that is the difference between Msos and YOLO. But then for us Canadian investors, our best options out there, far and few in between, we have HMUS, which trades on the NEO exchange in Canada. And this one is a focus only on US companies. And then we also have HMMJ, which is this chart I'm referring to, that is on the Toronto Stock Exchange, or sorry, not the Toronto Stock Exchange, the NEO Stock Exchange, but for Canadian investors in Canadian dollars. And we can invest in this, in the Canadian cannabis companies. So, yeah, I brought all these charts up here, but we'll just run through these fact sheets today, because it'll be a little bit easier, because again, this should come with some research and just a basic understanding of how this industry is evolving. Slowly but surely, it can only evolve as quickly as the U.S. regulations change and adapt. Canada has legalized it, but the slow government rollout and tight regulations there have, and slow opening of stores in our most populated provinces, that has had a massive effect. So the growth has been a lot slower than imagined. But I would also recommend that you check out my new series, Reality Check Cannabis in 2020. That is kind of where I give, it's an 8-episode series of all the context around this entire industry and the future potential. So that's where I think if you were to watch that and actually have an idea that this is going to be an industry and people are going to become a bit more accepting of the cannabis plant, and slowly over time it will become part of our lives with medicine and all the different uses it can benefit us with. Then take some time, send me an email, like let's chat too. Not to say that this is like you're gonna get rich overnight. That's never what I'm trying to advise people on, or never what I'm trying to tell people. It's just that this is gonna be an industry like alcohol after prohibition, or like investing in tech in the 1990s. In my view, nonetheless, Msos is the advisor shares pure U.S. Cannabis ETF, the freedom to invest in U.S. cannabis. And of course, the U.S. has 330 million people, so they have the most growth potential. That is what you want to consider with the U.S., and that's why I think the U.S. legalization will be the next big rush, and it will be much bigger than we saw in Canada even. But Msos trades on the New York Stock Exchange. It was actually just created last month, so it started trading on September 1st, 2020. It's brand new. And again, there's of course obviously some risk involved as it is investing, but why invest in Msos? It's the only U.S. listed ETF available on the New York Stock Exchange. Easy access for U.S. investors. Ideally, this is made for U.S. investors geared to the New York Stock Exchange. And then for the experience level is that Mso's portfolio manager, the person responsible for creating this ETF, does have a fairly good track record. So he obviously wants to put that up there to show that he has well-established expertise and that he's not making this for no reason. Like there is most definitely something to be had in this industry coming up if you've been paying attention to it. But Mso's assets are held by one of the largest U.S. custodial banks, BNY Mellon. Interesting, that name, Mellon. Now, so where can Msos fit into a traditional portfolio? High growth, high risk, high reward. However, it would be more of where you would allocate, 5% or even just $1,000, something small that you can put aside and forget about it again. Now, about the portfolio manager, Dan Aarons, he is the man that put it together, and he is the one with the reputable experience. So that's always something to consider. Dan works for Advisor Shares or on behalf or with them. So you want to make sure that you're investing in a fund that has a reliable management team as well. And he's also responsible for putting YOLO together. Nonetheless, this industry, again, you're looking at charts that, again, if you were to ask me, I think this industry is at bottom. Like, it is at the bottom. And I think with the U.S. election coming up and the potential for the Democrats to win either the Senate or the presidency in November, if the Democrats win the presidency in November, Biden does have a plan to decriminalize cannabis, so take it off the Schedule 1 classification, which would be huge, and then he would allow states to, and then he would legalize medical cannabis nationwide, and then he would allow the states to sort out their own recreational regulations. So, considering all of that's why I have confidence, at least in myself and what I know, saying that I believe we're at the bottom. Now, again, don't bet the house on any sort of investment in this industry, but definitely consider if you have some, excess cash, and you also believe that, we're heading in that direction, and that the Democrats might actually have a shot. Like, these factors, of course, it's complex. There are many factors that need to line up, but it is possible. So nonetheless, it trades at $21.99 And I believe it started trading at $25. So again, even since then, we have seen a pullback in the average prices. And as we can see, this asset allocation is completely in the United States. MSO is the word for multi-state operator. So that is a cannabis company that can produce and sell within a single state. They have a license to do that. So these companies do have to get licenses for different states. So what percentage? A small percentage is large cap. They're mostly mid, small cap, and micro cap. So that is why there's a lot of potential growth upside, I think, in these. But so if we look at the videos, if we look at what's inside of it, the fund holdings, Green Thumb Industries, Curaleaf, Trulieve, Innovative Industrial Proper, Cresco Labs, Grown Generation, AYR Strategies, TerraSend. So I would recommend checking out some of the other videos, especially video 3 and 4, which cover U.S. cannabis companies and Canadian cannabis companies. But this is the breakdown of what's in there. Now, if you are an experienced investor and you think you'd be better off investing directly in a single company of these, I would agree with you. But again, the ETF is a good way for the beginner investor to just get that exposure and not have to worry about it, be able to sleep at night. So again, these are some great companies inside here that make up this ETF. But that is one thing to consider, because this industry is going to have a lot of players come out at the beginning. And then the dominant companies that have established themselves really well are going to rise above all those players that eventually run out of money, things like that. So it's something to consider. But nonetheless, and the management fee, though, is 0.74%, which if you know from any of my other videos, that's on the very high side. So again, this is more of a potentially, again, buy and hold. There's no reason to buy and sell anytime quickly. But I just think that this fall has the potential to be a big catalyst if things fall into play. So, although you would be losing 0.74%, if you were to hold an ETF like one of these ETFs, let's say for 2 years or for 5 years, there's good potential that you will return better than 0.74%. So yeah, that's it for MSOS. Basically, though, there's no average annual return to refer to. These are brand new ETFs. So it is high risk, high reward. YOLO Advisor shares trades. So this one announces the dividend distribution. Awesome. Yes. So I know some of these have dividends. Anyway, I'm not going to get too sidetracked. This one trades on the New York Stock Exchange, has been trading since April of 2019. This one has the long-term upside potential. So again, buying this and holding it for 2 years or for 5 years, obviously for longer the better. But over time, that high MER does eat into the investments, and that's why you just consider maybe investing directly in one or two companies that you think are very good choices, as opposed to the ETF, and just hold those companies for 5 to 10 years. Because again, there would be no management fee involved with them. But it's the first active ETF with dedicated cannabis exposure. Okay, so good to know. This is actually an active ETF, so that would account for why the management expense ratio is a bit high. Again, we have Dan Aarons here putting it together. And again, there's not much to say about these ETFs. It's just there's the forward-looking growth potential in the future of this industry. And then you have the fact that these share prices are pretty close to bottom, especially considering U.S. multi-state operators posted record numbers in July and August, hit all-time highs, and now they've actually been pulled back in price. So here, like when I'm saying that Trulieve stock price, for example, last 6 months, right? So they have hit these highs in August and then they have pulled back. So this is why I do fundamentally believe we are at a bottom, just as an example. But again, if you were to go look at Curaleaf or Trulieve, any of those, they've hit the top and then they've pulled back. So I think we are at the bottom just because there's going to be a lot of buzz into the election. It's going to be a fascinating time to watch. Again, don't want to get sidetracked. So the price is $11.21. Again, it's fallen quite a bit from when the ETF debuted. So because this one has been around for a while, though, we can see that the year-to-date return is 6.85%. So even from January, it's up 6.85%, which is considerably good. Based on the year that every industry has been having, based on the global situation. But from 1 year, it is down negative 24%. So again, this is why I'm saying that right now is technically the best time to buy in. It's on sale if you have the guts to carry through with it, which is essentially just buying shares, forgetting about the money. When Warren Buffett says, be greedy when others are fearful. Be fearful when others are greedy. So when the prices are down and low like this, but we have the future to look forward to of this industry only getting bigger, that is when this is technically, we are being greedy when others are afraid because the price is down. So what's inside of this one? Village Farms International, Innovative Industrial Proper, GW Pharmaceuticals, Grow Generation, Afria, Arena Pharmaceuticals, Green Thumb, True Leaf, Curaleaf, Canopy. Very interesting portfolio. Personally, I would not invest in this one myself, but yeah, I mean it's diversified, though. This is a medical company that does CBD, medicinal CBD. Nonetheless, just it wouldn't be my pick for this one. But YOLO has mostly small cap, mid cap, and micro cap. And the fees with this one, though, is 0.74 again. So for an active ETF, still 0.74% is quite low. And it does pay a dividend, which is great. So we can consider the fact that these ETFs, I don't think Msos pays a dividend yet. No, there's nothing on there. But YOLO does pay a dividend, which is nice, of 10 cents, 12 cents, 19 cents, and 27 cents in the past. And then we will end off with these two. So I actually own HMUS myself. I've written this down, sorry. I have about, I must have invested close to $3,500 or $4,000 in HMUS about a year and a half ago. And I was, again, learning how to invest. I'm still just holding on because the shares, what if I sell, I lose money, right? So I'm just going to be holding on. But the whole idea for me investing back then, I was learning, I was new, but my idea was I'm going to buy these shares and I'm going to hold them until U.S. legalization. Once U.S. legalization runs up, then I would take advantage of that and probably sell a good portion of the shares for cash, keep some in there and just let it grow over time. My shares are, I have 167 shares at $22.59. So I am considerably, or I'm down a percentage here. I wanted to show you. Yes, with this. So HMUS, I have 167 shares. The average price, again, is $22.59, and the price is sitting now at $14.82. So my market value is $2,400. Would have been about $37,000 or $38,000 that I had invested in. But again, this is me treating this like a savings account in a way, but just showing up really, really early to the party. And so I did want to show that to you. So that is 8.45% of my portfolio. But ultimately, I'm just waiting for that to... So my plan, though, going forward is once I break even on this ETF, I do plan to sell 67 shares just so that I'm a flat lot of 100 and that I can get some cash out of it, because at this point, I've just realized that this is more of an investment of opportunity cost. However, going forward, I do still plan to hold it through U.S. legalization and just see what happens with that. But my goal with this one, obviously it has changed over time because I was just early and I jumped the gun on this. But nonetheless, that's how you learn, right? And hopefully you don't have to learn, and you can learn from my mistakes so that you don't have to. But so HMUS is the Horizons U.S. Marijuana Index ETF. So it currently sits at about $15.01 right now, or a little bit under. I'm not going to spend too much time on these because, again, there's only the few things we can look out for. But this one does... See, this is the thing that also was... This changed since I bought it, and it's something that I don't very much like, is that the management expense ratio has jumped up to $1. Or sorry, 1%, not $1. But 1% is way too high. So that is another reason why once I get to a certain point, I'm happy taking my funds out and just investing directly in the company. But this is found on the NEO exchange as well. HMUS was created in April of 2019. Net assets, so I must have bought it a year ago. Terrible investment, but nonetheless, it's technically a good time to get in now. The objective, though, is to replicate as much of the U.S. marijuana companies index. If we look at it all time, though, see, it shows that it debuted at $40, but HMUS actually did a reverse stock split. So I remember buying in, I think it debuted at $10, but because they did a reverse split, which made many of their shares combined into much fewer. That's why I now only have 167 as opposed to, I think I had 600 or 700 shares back then, thinking that was a good idea. The good thing is, though, it has paid a dividend, not consistently, but it does pay a dividend. That dividend payment has allowed me to buy more shares, which is kind of nice. But exactly, if you'd invested $10K in April, it would be down very low since then. So again, I do think this is just an opportunity for a self-direct investor that might have $1,000 and thinks, where can I put this in? with everything that's going to happen in the fall in the next few months in the U.S. election, this would be that time. But so from 1 year to date, it's down 1.57%. Over the past 6 months, it's returned 24%. Over the last 3 months, it's returned 20%, and over the last 1 month, it's returned 10%. So if you were to invest in this 6 months ago, you'd be up 24%. So do you see what I mean? I mean, like, that is a good example of growth, but again, since inception, it has done terribly. So more of a learning experience. But here, let's jump into the distribution. It has paid the dividends, but the holdings. So this one is U.S. heavy, Trulieve, mostly in Trulieve, Green Thumb, Cresco, Curaleaf, Planet 13, Charlotte's Web, TerraSend, and a few other companies. You can download those there. But that's pretty much it for HMUS. Again, we just want to look, since inception's not doing well, but it's at a fairly reasonable price to potentially enter for the long term now. But again, the 1% management expense ratio is, again, the reason why I would almost recommend just do your research on a few of these companies and choose one that you think is going to do really well. And your best bet, you would likely have made more money through capital gains appreciation by doing that as opposed to buying the ETF. But again, every investor is different, so that's just the way I see it. The nice thing is with the dividends, though, and HMMJ is the Horizons Marijuana Life Sciences Index ETF. This one invests on the NEO exchange as well, or no, this one, sorry, is on the Toronto Stock Exchange. And this management expense ratio is a bit lower at 0.85%. This one, again, came out in April of 2017. And the idea of this one is to own all of Canada. It seeks to replicate to the extent the North American Marijuana Index. So the performance since inception is down -4%. And look, across the board, it has not done well, but that is why, again, I'm highlighting right now is potentially a good time, because with the U.S. catalysts of the election, again, if Trump wins again or the Republicans keep the Senate, then it's going to be another tough time. But the good thing is to consider is that the companies inside HMUS, like these companies, they're not going to go anywhere, which is nice. These companies are established, they're functioning in states where cannabis is legal for recreational and whatnot. So there's no reason to be afraid of that. I just don't think you'll see the growth as quickly, which would be ideal, and I think we all want. But so yeah, 0.85%, you do get a bit of an advantage down there. Horrible performance since then. At least it does pay dividends, though. So 26 cents was the most recent dividend. It paid in March 2020, and then in June of 2020, it paid 18 cents. So I suppose it was introduced in 2017. Okay, this one's quite a fair bit older than HMUS, but it only started paying dividends recently. And lastly, if we look at the holdings, it's got Canopy Growth Corp, GW Pharmaceutical, Innovative Industrial, Afria, Kronos Group, Scott's Miracle Grow, Tilray, Aurora. And like, this is why I would caution this, though, because Canopy, in my opinion, is a garbage company. GU Pharmaceutical, they're like a pharma company. They're okay, but I'll be honest, I don't know anything about Innovative Industrial. Afria is certainly going to be the best play out of Canada. Kronos Group, again, not a great company. Scott's Miracle Grow, nothing related to cannabis. That's the Scott's Miracle Grow for your lawn. You got to get the good one. Tilray Inc., Charlotte's Web, Aurora, again, like, most of my investment is in Afria already, right? So my cannabis holdings are 100% Afria, and then another company called Tetra Biopharma, and that is a very high-risk, high-reward play for myself. But then my other investment is in HMUS. So I've got Afria, my single Canadian company. I've got my single Canadian biotech, high-risk, high-reward. And then I've got HMUS to play the US. And that is how I'm approaching it. I'm still just learning as I go, but if anyone's been interested in the cannabis industry as well, I hope this has been very useful, just to show you what is available out there for new investors and what you can actually consider getting into. If you did find this video helpful, I do apologize if I rambled on, but please make sure you leave a like. It always helps out my channel, and subscribe if you want to see any more videos. Leave anything in the comments. If you know any better ETFs, or you think any other cannabis companies might be better investments, let's have a conversation down there as well. But I want to thank you so much for tuning in to another episode of ETFs Explained, and we'll catch you for the next one. Have a great day.